Bitcoin has been arguably entering a bear market with falling down below the 50 weekly moving average. So is it going to be time to sell everything, or can this bull market still continue? Well, we need to talk about that exactly in today's update video. Need to tell you exactly how I am going to be approaching this and what my strategy will be. We'll talk about all of the most important Bitcoin and stock market charts, but also some economic data is about to come out today. So we need to have a look into this exactly. So a lot of things we will need to discuss. So as always, let's have a look into that shorter time frame. And in a shorter time frame, of course, Bitcoin has been in this downtrend over here. We have been seeing a slight little bounce for Bitcoin after we have been hitting our level of support, previous resistance, right now turning back into support, and we are seeing a bit of a bounce from off this level. And like I've been saying in my last few videos, yes, I do think that this bounce can be continuing to the upside, because we can be having a look into a bounce from a massive level of support, the yearly open, and also Bitfinex longs have been increasing. Whales have been longing Bitcoin, and this has always been confluencing with a Bitcoin local bottom that has been getting created. Right now, the same thing is happening again, so this is looking quite bullish. And also, we have been seeing extreme fear for about the last week or so. Usually always, extreme fear is confluencing with bottoms. Usually always, it is a good moment to buy whenever you see extreme fear. So yes, I'm getting quite bullish. But if we indeed have entered a bear market, well then usually we are seeing extreme fear for much and much longer. We can stay in these levels of extreme fear for literally months, and we can still see downwards price action. So keep this in mind. Yes, for the short term, this is going to be quite bullish, and we might be expecting a bit of a local bottom and short-term bounce. However, for the long term, for maybe potentially this coming bear market, this isn't going to be very good. We can be sitting at these levels of extreme fear and capitulation for much longer, because also we are seeing capitulation for the short-term holder supply and profit loss ratio. Like you can see, we are seeing capitulation now. So yes, all of these graphs are going to be indicating to us that we can be seeing a bit of a relief rally. And yes, I do agree, because historically speaking, always, whenever you have failed to hold the 50 weekly moving average, you've always seen a relief rally back into the 50 weekly moving average every single start of the bear market, also in 2017 and also in 2013. So we can be expecting this retest of the 50 weekly moving average, and this would be a very nice relief rally before then continuing downwards price action. Because yes, historically speaking, always, whenever we have failed to hold the 50 weekly moving average, and whenever we have seen that cross at the end of a 4-year cycle, at the end of this time stage, we've always entered a bear market. So keep that one in mind. Sell everything now. Well, I wouldn't say you to sell everything. I wouldn't tell you to sell everything. But historically speaking, because of all of these facts and all of these warning signals that we have been having a look into for the past couple months, well, historically speaking, we have continued downwards price action. Okay, now in a shorter time frame, I myself am going to be expecting somewhat of a relief rally. So yeah, maybe with that relief rally, you can be doing something. I myself am looking to be buying this relief rally and then to be shorting that pump to the downside again, shorting the retest of the 50 weekly moving average. Let's see about that. That is what I'm looking to be doing myself. Anyways, today we are about to get some big data, because today we are about to get the unemployment rate and the non-farm payrolls. Let's see if this data will be coming in good or bad. I do expect it will be coming in bad, because I am quite bearish on the labor market. We have been seeing a lot of layoffs, and we have been seeing interest rate cuts massively because of the weak labor market. And we haven't been getting any labor market data until, for the past month or so. Of course, yesterday or 2 days ago, we did have some kind of a labor market data that has also been coming out bad. But the big labor market data like the unemployment rate and non-farm payrolls, well, this will be very important and will be coming out today. Let's see about that. Anyways, for all of the people that will say, oh, yeah, interest rate cuts are going to be bullish. Yes, I agree. For the long term, it's going to be bullish. For the long term, it's going to be stimulating more money printing. But for the medium time frame, this has always been bearish as we are getting recessionary rate cuts now. The economy is weakening, the labor market is weakening, and because of that, we are getting interest rate cuts, and that has always, historically speaking, been bearish, okay? So everything is kind of confluencing. Yes, in a shorter time frame, we could be expecting a little bit of a short-term relief rally, but in that longer time frame, well, every single warning signal is just confluencing. So yeah, if you're going to be getting interested in trading this, because trading is the most lucrative right now, we are seeing a lot of volatility. You can both trade long and you can trade short. If you're going to be getting interested in doing that, you can claim a free 30 USDT by just signing up an account over on 2bit with this link down below. And then just sign up an account, no deposit, no KYC is required, and then a free 30 USDT will be deposited into your account at the reward center right over here. Free 30 USDT. Make sure to be checking that one out. Also, if you're going to be depositing a little bit or trading a little bit, you can also be claiming some huge rewards on top of that. So make sure to check out that link down below. Anyways, going even further, yeah, the VIX is now up for 4 consecutive weeks. And this is quite bearish. We are seeing a lot of volatility in the stock market. Let's see if this is going to be continuing, because quite honestly, for the stock market, we are only just at the tipping point, if indeed we are about to see a reversal. I'm not calling for a reversal for the stock market, because the stock market, the bubble can easily last for a lot longer and nobody would really care. Okay, that is the case with the stock market. However, for Bitcoin, it's a little bit different. I am calling out for a bear market because historically speaking, we have seen signs of a bear market. Now, my invalidation will be a break back above the 50 weekly moving average. If we break back above the 50 weekly moving average, that is going to be my invalidation, and that is going to be the point where I'll be saying, okay, we are not going to be seeing these lower targets over here, and we might have a look into a lengthened cycle this time around. We might still need to have a look into higher targets for this bull market, and this is just a failed bear market right over here to trap all of the bears. That is just going to be in the case if we break back above the 50 weekly moving average. However, for the stock market, yeah, not calling anything out here. I'm just calling out things for Bitcoin, but I like to observe the stock market, and the stock market is seeing some big weekly bearish divergences right over here. So yes, indeed, if this were to be a reversal point, well, then I want to be having a look into the 200 weekly moving average retest, because we are getting very overextended from this moving average. So let's see about that, if we can be seeing that. But for Bitcoin, we have been very bearish for a long time because all of these signals have just been there. I've been selling all my spot holdings at around these peaks over here. Been bullish throughout the entirety of this bull market. Been selling right over here because of all of the signs that have been there. The second Fibonacci level of resistance, we've been seeing a perfect liquidity grab above. That has been my selling point. And also, altcoins like Zcash have been pumping by a lot. By the way, I'm looking to be soon shorting Zcash potentially. If you want to be up to date about that, join the private Telegram group for free with the first link down below. Zcash will be pretty interesting. I think it's getting very overextended. Anyways, for Bitcoin, we've also been entering the end of the 4-year cycle theory, and via VZ score, we have been reaching this peak over here because of this downtrending trend line. Also, in the apparent demand, we have been creating many bearish divergences. Like we already know, the dollar currency index is bouncing back to the upside, hitting a massive level of resistance for Bitcoin, and OG wheels have been dumping. On top of that, the US economy has been weakening, and we have been seeing the labor market weakening. We have been seeing recessionary data coming in day by day. On top of that, yeah, whenever you are seeing recessionary rate cuts, this has always been signaling a peak for the shorter term Bitcoin price action. So yeah, because of that, I've been selling off myself. Now, do keep in mind, again, in a shorter time frame, we could see somewhat of a bounce back to the upside. Keep that one in mind. Anyways, these are going to be my targets. I'm going to be looking out for the 200 weekly moving average, which I really like to be accumulating a lot from off this level over here. But also, if we are going to be dipping down even lower, this is really going to be the moment where I'll start to dollar cost average aggressively into the Bitcoin market. At these lower levels, I want to be doing everything I can to buy more Bitcoin. But at these higher levels, I'm just going to be starting to buy some Bitcoin here and there, just a little bit of Bitcoin, but only at these lower levels, I'll be starting to buy very aggressively. But I'll already start my dollar cost averaging strategy right over here, just so I will not be getting left out if this bull market or this bear market is just going to be different. So keep that one in mind. Anyways, with that being said, you always want to be adaptive. You always need to do your research daily because everything can change day by day. This is my bias now. This is my analysis now. But this can very quickly change as some political person can say something huge, as maybe a war here or there could be breaking out. Anything can change very quickly as new data comes in, as new news comes in. So keep that one in mind. You need to research daily. You need to be very adaptive in this market. You need to set clear invalidations. But anyways, guys, with that being said, this was it for me in today's update video. Make sure to check out all of the links down below. And anyways, guys, I'll see you in another update video tomorrow morning.